Next is the concept of substance over form. We always say that we must record transactions based on the economic substance and not the legal form. Accounting should be based on economic substance and not the legal form. So can you think of examples where accounting would be based on economic substance and not the legal form? All right, I will show you some. Yes, yes. Okay, then. Yes. Is someone giving me an example?
Contingent liabilities.
Okay, so what is it about contingent liabilities? How is economic substance over legal form practiced? Could you tell me?
Like we have sued a party, it is a legal case. It might be possible, like we are damn sure, that the case we are going to win, and we are going to get the compensation.
Hmm.
Even court also has declared that so and so amount has to be given as compensation, but it has not received yet in the form of cash or bank. So when it will be received, we will record it into the books.
Okay. So only when it is virtually certain, you will record it as a receivable.
Yes.
But when the chance of you receiving the money is more than 50%, you will show it as a receivable, at least as a provision.
Right, ma'am. And because he also mentioned this, that court has already confirmed that this will be received, right? The liability
It's a court
has also,
order.
yeah, the liability has been decided.
It goes like this. Okay. What they say is that first, suppose you win the case and the period of appeal is going on for the other party. Okay. Then you will continue to show it as a you have won the case. It's a period of appeal. Now you're talking of a contingent asset or a contingent liability. Can we clarify?
Asset or liability both. Like
No.
I have given the example of a contingent asset. Given the
Okay.
example of asset.
Contingent asset. Okay.
Yes.
So what the standard says is that you won the case and it's appeal. That means the probability of you winning the case is more than 50%. So you will disclose it as a contingent asset.
So is a 50% rule or something in IFRS or Ind AS?
Yes.
Okay.
Yes,
Okay.
Yes. Whereas if suppose you win and the appeal is over, appeal period is over, now you will record it as a receivable. So you record a receivable when it's virtually certain. You will disclose it when the probability of the inflow is there. Probability of inflow means more than 50% chance of you receiving the money. Okay. So that is how it goes. All right. Someone told me provision for doubtful debts. Could you clarify what is what is a legal form and what is economic substance? In a provision for doubtful debts, what is the economic substance and what is a legal form? Okay, I'll give you another. Shall I give you? Okay, fine, no problem. But if you can tell me what's a legal form of a provision for doubtful debts and what's the economic substance, how are they different and why are we saying there is substance over form? Could you clarify that? It's okay if you can type me the message. Okay, anyone else has any other example? there is a 3-year period for the debt to be recovered. So now, when you're saying 3-year period for the debt to be recovered and it gets barred, okay. So that is in the court of law. Am I right? So now when I'm going to talk about a provision for doubtful debts, are we referring to a bad debt or a provision? I'm making a provision because the chance of my inflow is not going to be the chance of me getting the money is not there. There is an impairment. There is an impairment of my receivables. Okay, now again, this provision for doubtful debts that we are making also has got a particular format and a particular reasoning for making a provision. It is not something that we think like we just make as a random amount. So this is something that is dealt with by financial instruments. I think for now, I will not take this topic because there is a detailed analysis of how a provision has to be made when you have a receivables. So I would like to skip this example. Okay. All right. So I can give you an example of a substance overflow. Now tell me one thing. If you have a redeemable preference share, I'll look at the next example after some time. I just want to give my example. Saichara, please hold. So if I have a redeemable preference share, tell me one thing. What is the legal form of it? Is it a debt or is it equity?
Debt.
Debt.
Legal form. Legal form.
Preference
Legal
shares are
form is
equity.
equity.
Preference
Equity,
shares,
equity.
yeah, preference shares are equity.
But the economic substance is debt.
Right.
So now why do we follow this and how does it affect our financials? So here I have got a, if I'm going to go by the legal form, then on my balance sheet, I would show under equity, the redeemable preference share worth say 2,000. Okay. So when I calculate my gearing ratio, I will consider that as part of equity and I calculate my debt versus equity and I calculate my gearing ratio using that. On the other hand, if I go with economic substance, the redeemable preference share would come under equity, sorry, under debt. And I would have a totally different gearing ratio. So it is very important for us to record our financial statements using the economic form because the economic form of your redeemable preference share is actually like a debt. Although it has got the name of a share, it behaves like a long-term loan. Because when you issue a redeemable preference share, what are we going to pay the person from whom we issued? We are going to pay them interest, a fixed interest, and also when the term of the deposit is over, we repay back the whole money. So technically it is behaving like a debt, although it has got the name of a equity. And that, if it is not presented in the right manner, it will give us a wrong interpretation of the financial statements. The next part, let's look at how this affects my P&L account. Now, what does the standard say? It says from the consistency perspective, okay, overall consistency, which is part of our conceptual framework, it says that if you treat something as a debt, then the cost towards the debt is a finance cost to the company. Forget what name it comes under. So when I have this redeemable preference share worth 2,000 on which there is a 10% interest or dividend that I'm paying, I will show that under finance cost under the P&L account. Okay, so we go and that is how we maintain consistency. You showed something in a debt, so the cost towards it is part of your finance cost. And on the other hand, if you went with equity, then anything paid to equity holders is a distribution from profit. So after we get our profit after tax, we show the distribution of the profit. So now when I compare my P&L account, here I get a PBT of 2,250. But here I get a PBT of PAT of 2050 and one is 2250. So when you make your ratio analysis using the P&L account also, there's going to be a lot of difference in the way you interpret, in the way you calculate. So someone who is going to give you a loan also has to be very careful to ensure that a proper substance over form has been taken care of. So that is how IFRS follows substance over form. Now I want to ask you the next question. What if there is an issue of a convertible bond? How is it going to be classified?
Until it is converted,
Hmm.
it will be treated as a liability.
Hmm.
When it is converted, it will go to the like our share capital.
Okay, so now I got one answer. Until conversion debt, after that it is equity. Anyone else? Okay, I want to ask you the next question. Is that right to do that till it is converted, I will show it as a debt and then I show it as equity? Am I giving the right picture to my equity holders, to my shareholders, to my investors by telling this? Don't I have to tell my investors that there is a debt element in that also? Do you all agree that there is a debt content and an equity and a debt equity content on it, on this instrument?
Yes.
Okay, so now IFRS tells you that you have to classify it as part debt and part. So how the classification will be done will be discussed with you when we come to the session on financial instruments. But IFRS is following substance over form by saying that this instrument cannot be classified purely equity or purely debt. It has a content of both. So on initial measurement, we will split it between debt and equity and then we will do the account. Okay, so that is how substance over form, some of the examples that they are following is given.